Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast, the show that brings you the latest insights through leadership and stories from across the global mining industry. And in today's episode, I'm joined by Cobus Loots, who's the CEO of Pan African Resources, a company that has grown into a multi-asset, mid-tier gold producer with a market cap of over $2 billion. Under Cobus's leadership, Pan African have built a strong reputation for operational excellence, innovation in tailings retreatment, and a forward-looking approach to sustainability and energy security. We've been exploring the company's journey from its roots to where it is today, its recent move to a main board listing, and its strategy for growth both in South Africa and abroad. We'll also discuss Pan African's financial performance, its view on the gold market, and how its outlook for the future of mining in Southern Africa. Cobus, welcome to the podcast. How you doing?
Very well, Rob, yourself. Thank you for having me.
Yeah, I'm good, thank you. And appreciate you coming on the show. How we always start these off, as you're aware, is we want to get an understanding of yourself, of your career, so the audience knows a little bit about yourself. So if you can just tell us a little bit about your career, how you got into the mining industry, how your career obviously has developed over time to what it is today as the CEO of Pan African Resources. So wonder if you can just tell us a little bit about yourself. So I hand it over to you.
Great, thank you. Yeah, so I'm a chartered accountant by training, and also a chartered financial analyst charter holder. So that definitely helps in terms of assessing investments and capital allocation, which, to be fair, in the past has been a criticism of the mining industry, the manner in which capital is deployed. So that was the background, and then sort of got into mining investment banking in the early 2000s. And for me, at that point, it was gratifying, but it felt that I wanted to be closer to assets and actually operations, and then sort of got the opportunity of getting involved in mining investment, and we built quite a nice portfolio of mining assets in Southern Africa. And then sort of one of the companies I was involved with was Pan African. I became a director in 2009. I then sort of moved across full-time, I think 2012, 2013, and became CEO 2015. So, yeah, I've been the CEO for some time, to be fair, yeah.
So, wondered if you can just tell us a little bit about the history of Pan African, just a snapshot of the company and how you built the company to over $2 billion market cap, where you're obviously here today.
Sure. Well, the company started off in African gold exploration, and then really the turning point was the acquisition of a controlling stake in Barberton Mines in 2007, and in 2009 all of Barberton was consolidated under Pan African. So Barberton is a very interesting mining complex. It's one of the oldest operations in the world. Started mining in 1886. And we still have more than 20 years of life at Barberton, so that's incredible. So that really was the genesis of Pan African, and then we proceeded to acquire the Evander mines in 2012. And as part of Evander, we acquired all of the historical tailings facilities. So Evander was mining since the 1950s, so they had tailings of more than 200 million tons on surface, and that really, I guess, Pan African have differentiated ourselves in terms of tailings retreatment. So that really, the first tailings retreatment plant on the gold side that we built was in 2013 at Barberton. It's an asset called the BTRP that we still operate today. So when we started the BTRP, the idea was that it would run until 2021. And I think it's just been an exceptional success. It was $30 million that we paid back in 18 months when we from when we started operations. So that was our first foray into gold tailings. And then, as I said, Evander we acquired with the tailings, and we proceeded in 2018 to construct a plant for about $125 million that was named Elekulu, or the big one. That was the first sort of really large-scale tailings operation after a couple of other iterations at Evander. And Elekulu was a fantastic success. It paid itself back in under 3 years. It still, as we sit here today, has a life of circa 9 years, producing some 50,000 ounces. So, I mean, that sort of one thing led to the other. And then we started looking at other tailings opportunities, and we acquired Mintails, an operation that we now call MTR, from Liquidators. And this operation is on the west rand of Johannesburg. It's also more than 200 million tons, and we actually got an incredibly good deal. We sort of paid $2 per ounce in situ, and when we were done with our work, we established that this was going to be a very successful business. We proceeded to raise finance and build it, and we commissioned MTR in October of last year. And that's going to go for a long time, also producing 60,000 ounces. We actually just busy expanding to 60,000 ounces. So MTR or Mintails has been a great success. And then ultimately also, I mean, we continue to look at other opportunities, and we identified Tennant mines in Australia. Sort of as we were commissioning and building MTR, we were also looking at Tennant. We closed that transaction in December, and also proceeded with the management, who are still on board in Australia, to build that plant, and we commissioned that plant in May of this year. So I mean, it's been tremendous growth for us. I mean, Barberton Mines, if we look back, was producing about 100,000 ounces a year, and our forecast for the year ahead is 275,000 ounces or more. So it's been a really good growth story for Pan-African, and certainly for our investors over the years.
Just share some of your thoughts behind the timing and decision to move the company to the main board.
So it seems like a natural progression for us. When I became CEO, we were also dual listed. So we had our AIM listing, and also now the listing on the JSE in Johannesburg. And we make it a conscious decision to focus also on the UK market and UK shareholders. And I have to say both markets have been very supportive of the business over the years. We have some long-standing UK shareholders, and most shareholders in Pan-African are quite happy. I mean, we did the analysis the other day. If you'd invested in 2009, that's what I bought my first Pan-African stock as a director. I mean, those shares, excluding dividends, have grown 38 times. So it's been a very good investment. So yeah, but we've loyal and supportive shareholders in both markets. The AIM market has been good for us, but there's obviously been some changes to the regulatory regime, and the company has grown, both in terms of production and also in terms of profitability and size. So it seems to be the natural next step for us. A number of our UK investors have said to us over the last 18 months or so that we need to seriously consider this move. And it seems like it's going to be quite positive for us, and we're quite excited to make the move. There are not that many gold counters currently available for UK investors of scale. So, we like to think that's also a gap that we can fill to some extent in that market. So it's a good time for us.
Tailings retreatment has become a core part of the growth story for the company. What are the main technical and social environmental lessons that you've actually learnt in turning historic waste dumps into profitable, sustainable operations?
As you say, these businesses or opportunities have been a fantastic boon for Pan-African We are able to produce both at Elikhulu, BTRP and MTR at, say, circa $1,200 all in sustaining. That's very competitive when you compare it to the global sector, where the all in sustaining costs have gone to probably about $1,700 per ounce. So these are low cost ounces. They're quite stable. You don't have the volatility that one becomes. That's more natural to the underground operations, and they also clean up legacy liabilities. So we always say that you actually turning liabilities into profits. Without the expertise, without the capital, without the operation, the plants that we build, obviously these would only be liabilities. But we ultimately clean up land. We deposit the retreated tailings on new modern facilities that are compliant with modern standards, and we free up land for other uses, development, agriculture, the like. So it's really a positive development that undoes some of the legacy issues that relate to sort of 100 years or more of large-scale mining in South Africa.
Energy security and renewables are obviously increasingly important in South Africa, as it is the rest of the world. Can you walk us through Pan-African's strategy on power resilience, renewables, and reducing dependency on the national grid?
So, we were the first South African miner to commission large-scale or utility-scale solar plant at Evander. And it's a very good success for us. It's a payback on a utility of some 4 years. So definitely it makes financial sense. We then proceeded to build another 9-megawatt plant at Barberton. And we rolling out renewables quite aggressively in the group. So the board has approved a further 20 megawatts at Evander. We'll look to start at a further 20 megawatts at MTR. And then we've also signed a power purchase agreement for a further 40 megawatts. So these renewable projects, as I said, they make financial sense. They bring down our cost of production, and they also assist with reducing emissions, which is important in this day and age. So it's a win-win for everybody. It's great to see these plants being rolled out. It's quite exciting. Our target really is in the next sort of 3-4 years to source 50% or more of our energy requirements from renewables.
Recently expanded outside of South Africa, for example, with your Australian gold and copper project. How do you approach cross-jurisdictional risk, and what lessons does South African mining offer to sort of newer mining jurisdictions and sort of vice versa?
It's an interesting one. We've been exploring opportunities for diversifying outside of South Africa for many years, mostly into Africa. The political situation in a lot of Africa at this point is not conducive to investment. And despite certain views on South Africa, we have such a long and distinguished record on deep level mining and all sorts of mining. And I think we have a track record second to none. Our Barberton mine, as I've said, has been producing for more than 140 years. So we're very comfortable operating in South Africa. And it might seem like a bit of a strange angle to then go across to the Northern Territory in Australia. The opportunity came across our desk, and the first thing we always do is assess the geological merits. The geological merits certainly stacked up, and then we're quite conservative, so it took us a long time. It took us almost a year to make an investment decision. The way we run our business is also, for the most part, decentralized, so we like local management to be in charge and to make decisions. And as you say, we're cognizant that things certainly in Australia will not work like they do in South Africa. There are pros and cons to anywhere in the world. So we have a local management team in Australia, an experienced and a good track record, and they're driving our business on that continent. And that's the sort of way we do it, under the banner of Pan-African, all of our culture and our philosophy in terms of operations, but cognizant of the fact that local people in any context generally do things better.
I suppose following on, I just wonder if you can just tell us a little bit about what's happening in the South African mining industry, maybe some of the challenges, maybe some of the issues, and maybe some of the positives that are happening within obviously South Africa in obviously terms of mining.
Well, I mean, the positive certainly, I mean, for our business is that we, I mean, saw such a large proportion of our production. If we include Australia, sort of 60% of our production comes from surface, which, as we've said, is stable, low cost. Again, we have a long track record of operating in South Africa. The fact that we're rolling out such a lot of renewable initiatives means that in real terms, our costs should come down. And South Africa has sort of a long history of large-scale mining, which means that you have the technical abilities and support that you require. It's also a country where our currency, the rand, is very much a commodity currency, similar to Australia. So that's a good thing for us, we believe, comparing us to the rest of the African continent, where most costs are dollar-based. So you have a natural hedge operating in South Africa with our currency. Our mining regulations, there are some proposed changes which we've commented on, but they've been stable. The environment's been quite stable. As Pan-African, we've never had protracted labor issues or strikes on any of our mines, so we have a good relationship with our employees. So those, I would say, are some of the positives.
You've also put out your full year financial results to the end of June. Just wondering if you could just tell us a little bit about the year that's just gone.
Yeah, it's been a great year for us. I mean, we produced 6% more gold. The gold price was up quite materially. We didn't have the full benefit of the gold price because we had some historic hedges outstanding that were necessary for us to fund the MTR project. But importantly now, from the 1st of July, we're fully unhedged, so shareholders get the full benefit of the gold price. So it was a good year for us, and also a year of records. So it was record production in the second half of the financial year. It was record earnings and profits per share, or earnings per share. And we're proposing a record dividend also for approval at the upcoming AGM. So despite the fact that we commissioned 2 transformational projects with quite a lot of capital, we still are able to increase the proposed dividend in US dollar terms by some 80%. So I think that's very positive for shareholders. And then also at the prevailing gold price, we should be pretty much de-geared on a net basis before the end of the next financial year, so before the end of FY26. So that puts us in an incredibly strong position. So in summary, a good set of results, we'd think.
Speaking of obviously gold, just wonder what your views are on the yellow metal, and what your thoughts are with maybe the gold price or gold as a commodity moving forward.
Well, the world, seems an uncertain place at this point, and the geopolitical situation is obviously driving gold price, as is the diversification of central banks and others away from the US dollar in this environment. I mean, it feels to us like it's been a long time coming, and finally, Gold's day is here. We make a point in our results also to say that still, despite the increase in the price, generally people are still massively underexposed to gold. And that means that if there's any further upsets, one could see even more of a rally. We don't need the current gold price. We can operate at a much lower gold price and still generate very attractive returns for shareholders. But, it's good, and certainly long may it last. So that's sort of generally our views on the situation. It's a very positive environment for us, and we'll definitely capitalize on the situation to de-gear, continue to reinvest in our assets. And we also make the point that investing in Pan-African, you're also effectively buying 40% production growth or more in the next year, and that's something not many producers can offer. We will have full years of production from MTR and Tennant. There's very significant growth potential still within our own portfolio, so that makes for a very attractive story in the biggest gold bull market in history.
Looking ahead, what do you think mining for a future looks like in South Africa, sort of for the next 10 to 15 years? And I suppose what role does Pan-African intend to play?
Well, broadly, our mantra is to make a positive difference in the areas where we operate. And we can most definitely profess to be doing that. And I mean, we employ 5,000 people, including contractors in the group. So it's great employment. We provide economic opportunity. We obviously generate attractive returns to shareholders and for other stakeholders. And then we also clean up the environment in terms of the tailings reprocessing that we're doing. So it's a good story. And you talk about the longer term. Pan African's actually in a good position because all of our assets are generally long life. So and we'll be around for quite some time. We certainly we're one of the dominant players in the space, and that also allows us to look at other opportunities.
And lastly, just wonder what the outlook is for the next sort of 6 to 12 months for Pan African, and also wondered if there's anything else you want to share with our audience.
No, I think it's an exciting time for a producer like Pan African. As I said, we're looking to grow production quite materially by 40% or more in the year ahead. That also means that our cost per unit of production will reduce. You'll see strong performances from our assets. You'll see, in terms of our forecast at this gold price, we should have pretty much no debt by the end of the financial year. There's some more growth we'd like to think to come. We're looking at potentially further expanding MTR, and then our Tennant Creek, Tennant Mines opportunity in Australia. There's such a lot of growth that we could look to unlock in that part of the world. So it's an exciting time for us the next 12 months.
Cobus, thank you for your time. Thank you for sharing your story. Thank you for telling us more about Pan African Resources and obviously the growth of the company and what you've achieved to date, and your views on South Africa as a mining jurisdiction and obviously the gold as a commodity. If our audience wants to reach out to you, if they want to follow the company's story or yourself, what social media platform channels are you on?
We're on LinkedIn and Twitter. And obviously, we just revamped our website. So most of the information, all of the information is available on our website also.
Yeah, great. We'll include those in the show notes that accompany this episode for easy access for our listeners to go and view and reach out if they have any questions. So thank you again. Appreciate your time. And perhaps you want to come on next year and give us an update.
Fantastic. Thank you for having me and look forward to speaking soon.
Yeah, no worries. Thank you for listening. I hope you enjoyed that episode. As always, appreciate your continued support. Please keep sharing these episodes far and wide. We want to educate the mining industry as much as we can. And obviously with this episode, gold is in the news at the moment, and hopefully it will continue being in the news, and the gold price continue rising. So appreciate if you can share this across everyone that you know out there within our industry. So thank you again for listening, and until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.